Hello everyone, welcome back to the channel. In today's video, we are going to review Sofi because we are back in the resistance, the supply zone that I highlighted a few weeks ago. We have done charting on this particular ticker multiple times before. I've mentioned that the supply zone, the major one, is between $23 to $24 because that goes back to 2021 time frame. We tried to break out of this and then got rejected, and then we are down under it. And the next mini supply zone that I'm watching for is between $18 to $21. Every time we break into this zone, we will get supply, we will get rejected, and we will come back down. And recently we had earnings where we pulled into the $15 area, but then the next day we pushed back up, and everybody comes out on Twitter, on X, on YouTube. Everybody's excited about how SoFi is ready to all of a sudden break out into the highs again. But this is exactly why I created this YouTube channel, to help you see through the noise so you can understand if this is a trade you would like to take or not. Now, if you're somebody who added at $15, you're sitting pretty nicely, and those are the right times to take a trade. But if you are someone like me who is looking for the best time frame to take SoFi where you can make 80 to 100% on this, I still think that we will come back down under $14. Most likely at 13 might be the best price to enter this stock. I remember going over these double bottoms in my last video, and I told you guys that we should be able to come back down all the way into these double bottoms like this, and then reverse back up, and then we can make our way back towards $23, $24 area. But obviously, as you can see, we did not do that. We came back to create a triple bottom, and then we reversed back up. And that is more of an indication for me that we will not hold this level, because double bottoms already do not hold well. Triple bottoms are even worse. Somebody who has just read textbook technical analysis will tell you that these are the best support places to buy. I mean, double bottoms don't break, triple bottoms don't break. They're great, but I'm telling you with experience is that double bottoms, triple bottom, quadruple bottoms, or even if that's a term, I don't even know. These are only created to show you that support is being held, but then the stock pulls below those levels and a liquidity flush happens. All those people who were buying that support area get flushed out. But then this is also a funny scenario, because all the people who were telling you to buy double bottom or triple bottom will also tell you to put a stop loss right under it. So technically what they said did work. If you bought this double bottom here and then sold it at $19, well, great for you, because if you put a stop right below it, it would have worked out for you. Same thing with the triple bottom. If you bought it here and put a stop a little bit lower, it worked out for you. But if that's only for like 20, 15, 20% trades, right? So if you're looking for something that is over 50% winner or towards 100% winner, you need to wait for those major liquidity flush zones. And when a price enters a liquidity flush or a zone that nobody predicted, all those stop losses go off. That is where serious money, institutional money comes in, and then most likely you'll see an instant reversal back up. So for anybody who's watching this and thinking that they missed the boat, they should just go long 17, 18, $19. I'm telling you, your upside might only be 30%, but your downside also at the same time will be about 25 to 30%, because you don't know what happens. And this will most likely line with SPY's pullback, which I've been posting about for a few weeks now. We will see some type of midterm correction. Obviously, there's no guarantee, but the previous pattern, the previous midterm years have shown us that this is most likely going to happen. You can see that Iran and US is not reaching a deal. We have midterms coming up. Bond yields are breaking out on 30 years and 10 years. Mortgage rates are pushing higher. There is so much uncertainty going around. So all of that is just building up for this correction that we should see a 10 to 20% pullback in the indices. So if that happens, that will bring back SoFi towards the $15, $14, $13 area, and that would be the best time to buy this stock. But again, I do want to say that I could be wrong here, but I created this channel to help people find the best setups in the market, and this setup is good, but I think we can make this great. This can become better if we can see a pullback into the $13 area. And I'm not making this number up. We have consolidation in 2025 that we can tap into, and as crowded as this trade is, this will be the best possible scenario for the stock. And I also want to mention, if you are feeling the FOMO of missing out on this trade, this setup on SPY is very, very predictable. We have seen this multiple times in the last few midterm years. As you can see, this has happened a few times before, and I will keep mentioning this SPY setup until it happens or until we're already in 2027, because this is predictable. And if indices do correct 10 to 20%, everything will come down along with it. So there's no urgency to deploy your cash. In fact, it's actually a great time to make sure that you have cash sitting around, because the risk reward entries that I will give you when this correction happens is going to be amazing. Every trade you touch, every position you take will be skewed to the upside with very minimum risk. So with that being said, I hope you found value in this video. If you want me to review a particular ticker, please drop it in the comments. Leave a like, subscribe to the channel, and I'll catch you on the next one. Thank you so much for watching.